The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Monday, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. You can catch my show every day on TFNN from 3 to 4 Eastern, just ahead of the Tom O'Brien show. The phone number hasn't changed. Toll free, 877-927-6648. If you can't listen to the show live, the daily reminder, you can head over to iTunes, pick it up as a podcast. Feel free to leave a review if you'd like, and you can listen to all TFNN programming on your smartphone these days. All you have to do is open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. Don't forget about Tiger TV, great feature on the homepage of tfnn.com, Channel 1. The show is carried live. It is archived on Channel 13. You can not only get the show audio on Tiger TV, but you can also look at charts live right along with me. So if you want to watch Tiger TV on your smartphone, that feature is available too. Just open your smartphone browser, type in tfnn.com, and then go over to the top right-hand part of the homepage. You'll see a box with 3 cell phones in it, and click that box. It'll recognize what type of device you have and start streaming. So pretty good deal. Folks, exciting day today. Drum roll, please. Great Panther Silver, Super Silver giveaway. The official start today. We're going to be announcing a winner sometime before the end of my programming, but starting today through February 1st, every broadcast hour on TFNN from 9 a.m. Eastern to 6 p.m. Eastern. You get one lucky listener will receive a free piece of silver. So you can still register on the homepage to register for your chance to win, so be sure to check that out. All right, let's check in on the major averages here. And we are up near session highs here, so major averages trading in a tight range today. Headed into today, the Dow up 11 out of the past 12 sessions, trying to make it 12 out of 13. Does the Dow look extended here? Yes, it does. This is a daily chart of the Dow that we're looking at in Tiger TV with the 10-day, 20-day, and 50-day simple moving averages plotted. These are near-term support levels for the Dow. First stopping point will probably be the 10-day. May find support, may not, but it's amazing. The Dow, let's see, the 10-day moving average is at 13,691. So you'd be talking about a 210-point decline for the Dow just to get back to the nearest term support level, which would be its 10-day moving average. At this point, a pullback even down to 13,513. That would be a 400-point pullback in the Dow. Percentage-wise, not all that much, considering how far we've come over the past few weeks. So at this point, to me, a pullback for the Dow down to that 13,500 level would not be surprising at all. And the Dow could do that and its uptrend would still be intact, because a pullback down to 13,513 would basically be a pullback down to its last breakout area. So all of the major averages basically find themselves in this position. They are a little extended, but again, the fact that the market is extended doesn't make me really feel like rushing for the exits and selling everything in the Ultimate Growth Stocks model portfolio. All holdings continue to act quite nicely, so I'm just going to let them work for as long as I can. Checking in on the S&P 500, down a fraction, down pretty much 1 point to 1502. Pull back, to the S&P 500's 20-day moving average. It'd have to come down a little more than 30 points to get down to that 20-day moving average at 1470. That appears to be a logical support level. And then the NASDAQ composite. Let's see what the composite is up to with these key moving averages plotted. It's a 20-day moving average at 3109. Right now, the NASDAQ up 9 points to 3159. So you talk about a 50-point drop for the NASDAQ to get down to what looks like a key support level, the 20-day moving average at 3109. Don't forget the NASDAQ still has a gap to fill. Not out of the question that we could try to fill it in the near term here if the market does decide to come in and consolidate. But really, the story remains the same. No sell signals that I can see. Doesn't mean that we won't start to see a multitude of higher volume declines start to kick in here as we approach the month of February, but I don't think it's reason to get too bearish at this point. So that is where we are at in terms of the major averages. Volume today tracking pretty close to what we saw on Friday. Volume on the NASDAQ Friday slightly above average at 1.88 billion. We're coming in tracking pretty close to that today. Volume on the New York Stock Exchange Friday average at 689 million. We are tracking very close to that level today. Checking in on gold. February gold fell $3.70, 0.2%, settles at $1,652.90 an ounce. Checking in on the GLD here, broke below its 200-day moving average, a long-term support level on Friday. It is extending losses today, down another 44 cents, 0.3% to 160.21. So the GLD still can't get out of its own way here. In terms of gold bullion, I mentioned the settle there, 1652.90 an ounce. That's the lowest settlement since the first week of January earlier this year. March silver settled at $30.78 an ounce, down 43 cents or 1.4%. U.S. dollar index recently trading at 79.80, up modestly, up less than 0.1% on the day. March crude oil settles at 96.44 a barrel, up 56 cents. How about these bond yields? Yield on the 10-year note, I believe, touched 2% today. Everybody's watching that 2%, saying that if the 10-year note builds a home above 2%, 2.05, 2.1%, whatever it is, that could be enough to bring some new money into stocks as losses intensify in the bond market. So 10-year note has come off that 2% level, last at 1.97. The 30-year bond, 3.15%. Let's check in on shares of Facebook. We have several long positions working right now. Stocks that we have in recent weeks have put out buy recommendations on. Shares of Facebook continue to do very well, working on 5 straight gains. Broke out over a mini resistance level today, just over 32. Shares of Facebook up 2.5%, near its session high to 32.33. Raymond James had good things to say about the social network. They upgraded Facebook to outperform from market perform, citing strength in the company's mobile ad business. Facebook comes out with earnings after the close Wednesday in a couple of days. Earnings expected to be up 7% from a year ago to 15 cents a share. Wouldn't be surprised to see a nice beat there. Sales up 35% to 1.52 billion. So good day for Facebook, good day of outperformance. And then taking a look at another recent buy recommendation in the Ultimate Growth Stocks model portfolio, shares of LinkedIn, the online professional network. They are going to be coming out with earnings in early February. The earnings expected to be up 58% from a year ago to 19 cents a share. Sales up 67% to 279.4 million. LinkedIn having a solid day today, up 2.8% to 127.20. Kind of a pivotal day for LinkedIn. Let's see if we can find a weekly chart here. There's LinkedIn, and I think I have a weekly. Yeah, here's the weekly. Here you can see that prior resistance level, recent high of 125.50. LinkedIn has broken out over that high today, so the concern here, not really a concern, but working on 5 straight up weeks, I think we'll get a better opportunity to add to this position, pick up more shares if it pulls back with the broad market here. If it doesn't, I'm more inclined to just kind of let this thing work, and we'll leave it at that. But nice breakout for LinkedIn today. You can see the annual earnings growth expected for 2012 and 2013. Again, earnings coming up within the next 2 weeks, and expecting strong results here as well. And one more model portfolio holding, Salesforce.com. Late Fridays, kind of a strange press release. Not a strange press release, but the timing of it was a bit strange, because news broke that CRM has filed for a 4-for-1 stock split. They have intentions on splitting shares 4-for-1. This does not change the value of the company in any way, but basically what's going to happen is Salesforce trading at 178.08. You divide 178.08 divided by 4, and you're going to get a share price after a 4-for-1 stock split of $45 a share, and the number of shares outstanding is going to increase by that same amount. So market cap always stays the same when a stock splits shares. It's just that it becomes more palatable to investors. If they can buy a stock for $45, they're more prone to do that rather than buying less shares for 178. So anyway, shares of Salesforce up 2.4% today to 178.08 on news of that 4-for-1 stock split. So several holdings in the model portfolio performing very well during this up market. We are still being proactive, being diligent, just keeping an eye out for sell signals, but with so many holdings holding above key support, I'm interested to see how when these markets do pull back. I'm willing to be patient here and just look at the nature of the pullbacks of stocks in the model portfolio. If I start to see technical signs of weakness, above average volume price declines, things like this, then we may get defensive, start trimming positions. But really, I do want to give what we have recommended out there. We want to give these names time to work. Check in on shares of Apple. Apple is not a holding. I mentioned on the show that we got out of Apple in early October when it was trading around $670. Never went back to the stock. Apple bouncing a little bit today, up $11.57, 2.6% gain to $451.45. Stock shrugging off a downgrade at R.W. Baird. R.W. Baird cut Apple to neutral, cut its price target to $465, saying that earnings estimates are still too high at Apple. Coming up next, folks, we are going to check in on some economic data. Lots of earnings reports to talk about. Lots of news in the market as well. We'll do that in about 4 minutes. Stick with me. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Do want to announce this hour's winner of the Great Panther Silver Super Silver Giveaway. And today's winner, we weren't able to get him on the phone, but it is Al in Loveland, Colorado. Colorado, a great market for TFNN. So Al's going to win a half-ounce silver bar. And again, for your chance to win free silver in the Great Panther Silver Super Silver giveaway, go to the homepage of TFNN.com and register for your chance to win. So there you have it. Congratulations to Al in Loveland, Colorado. Okay, taking a look at economic data. We had a pretty good reading, durable goods orders report for December. Overall, they were up 4.6%, much better than the consensus estimate for a 1.6% gain. Excluding transportation, they were up 1.3%, and the estimate was for a flat reading there. So more economic data that is pointing to, decent an economy that's in decent shape. We do have still a lot of economic data on tap the rest of the week. We'll get to that in just a little moment. But pending home sales also came out earlier today. They fell 4.3% in December. That's according to the National Association of Realtors. Economists were looking for an increase of 1% from November. So on the surface, disappointing data, but the unexpected decline, according to the National Association of Realtors, was not because of lack of demand, but rather very low supply. So that is not necessarily as bad as it looks. Year over year, pending home sales up 6.9%. All right, so there you have it. Coming up tomorrow, we're going to get more housing data, the Case Shiller 20-city index for November. We're going to get the Conference Board consumer confidence for January. Wednesday, the first reading to fourth quarter gross domestic product. That's always interesting after, I believe, the economy grew, 3.1% in the third quarter. This time around, economists looking for growth of 1% in the fourth quarter. We also have a decision on interest rates by the Federal Open Market Committee. That comes on Wednesday. And then don't forget about the employment report this Friday. That is for January. I think non-farm payrolls expected to rise by about 180,000 or so. Unemployment rate ticking slightly lower to 7.7%. Also on Friday, another key manufacturing data point, the Institute for Supply Management Manufacturing survey. So we'll see what that looks like on Friday as well. You know, the one thing about the market today is that we've seen a lot of growth names under quite a bit of pressure. And even when the indices were in negative territory, there were a lot of growth stocks materially underperforming the market. But I am told by my great producer in Florida that we have a winner on the phone earlier today. His name is Josh in the beautiful city of Denver. He is a winner of a beautiful silver bar today. How you doing today, Josh?
I'm doing great, Ken. How are you?
I'm doing fine. Thanks for calling in. Apparently, your name was drawn earlier in the day, so it's great to have you on the phone. Congratulations on winning a beautiful piece of silver from Great Panther Silver. Congratulations.
Thank you.
So are you an active investor, Josh? Do you follow the market sort of with one eye, or are you pretty active or inactive right now?
Well, I work as a physical therapist, so I'm busy 40 hours plus a week. So I do keep my smartphone handy and try and check my positions in the market overall at least a couple times a day.
That sounds good. There's a lot of pessimism out there about this market here. You have the the Dow up 11 out of 12 days, and a lot of people looking for a market pullback. But it's always strange to me when the market is acting really, really, really well. People don't like to believe it. You know what I mean? They're almost ready to sell everything because they don't trust the market and they want to take the profits when they have them.
I wish I had more profits to take, Ken.
Well, I got you. Are you mostly invested in stocks? Do you do options, futures, or just mostly stocks?
Mostly stocks, ETFs.
All right. Well, good deal, Josh. Appreciate you calling in. Congratulations once again, and thanks very much for listening to TFNN. We appreciate it.
All right, Ken. Thanks. Bye-bye.
All right, Josh. All right, it's Josh in Denver, one of the winners of the Great Panther Silver Summer Silver giveaway. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks.
Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. A little more than 25 minutes left to go in Monday's session. Checking in on the Dow here, down 8 points to 13,888. 13,888 last on the Dow. Tech stocks outperforming a little bit today, not by much. Nasdaq Composite up close to 6 points to 3155, and selling very muted in the S&P 500, down 2 points to 1501, still holding that 1500 level. Mentioned volume at the top of the program, tracking pretty much to what we saw on Friday. Volume Friday on the Nasdaq, 1.88 billion shares. We're tracking very close to that right now. And volume on the New York Stock Exchange Friday, 689 million. We are tracking pretty close to that level as well right now. So all in all, another constructive day of trading. Mentioned also that headed into today, the Dow Jones up in 11 out of the past 12 sessions, trying to make it 12 out of 13 here. So even though I continue to slant bullish here after the run the market has had, no one would be surprised to see a little bit of a pullback here. But again, when you look at moving averages for the major averages, these will give you a general idea of when we do pull back, what you can expect maybe the pullback to look like. So again, looking at a chart of the Dow in Tiger TV, 10-day moving average at 13,690. That would be a pretty modest pullback for the Dow. I think what is probably more likely when the market does begin a consolidation phase here, we could see a trip for the Dow down to its 20-day moving average, 13,512. That would be a pullback of, 350 points from where we are now. So percentage-wise, not that big a decline. I think it would take some really ominous headlines in the market, and who knows, it could be a dismal jobs report on Friday. I'm not expecting that, but it would take a pretty dismal flow of negative market headlines for the Dow to come all the way down to its 50-day moving average, which is 13,222. 13,222. So that would be a decline of more than 650 points for the Dow to get down to that support level. So continue to slant bullish here. I know you've probably been hearing that February is not that great a month for stocks. So again, it's just a matter of looking at what what the nature of the pullback, when it comes, what does it look like? Is it a pullback in light volume? Is it a pullback that is marred by heavy institutional selling, leading growth stocks breaking down? That would be less desirable. 877-927-6648. Let's go to Robert in Chicago. Wants to talk Whole Foods market. How you doing, Robert?
Hi, Ken. How are you?
I'm fine, thank you. Good to hear from you.
Great. So what's your take on Whole Foods market?
Well, it's been an incredible move. I mean, we're talking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 straight up days here. So Whole Foods was the one and only, short position that we had working for a little while in the Ultimate Growth Stocks model portfolio. We were actually short back in, November, December, thereabouts. And, we had to, I think we got stopped out for a 2-point loss, something like that. So 11 up days in a row. I mean, it has certainly started working on the right side of a base here. There's been some decent juice behind the move. Are you thinking about buying it? Do you currently own it? What are you thinking of doing?
Yeah, I'm currently longing it. I guess I'm long it, and I'm wondering, do you see this going above 102?
It's looking real good. It's looking real good right now. I mean, it's high back in early October was just over 99. So this all of a sudden, I thought this was a very vulnerable stock back in November, December, when the market direction wasn't totally clear. But its technical picture is improving by the minute. What I would envision happening here is that it looks likely that it's going to retest that high just over 99. Let me get the specific price there. Yeah, it's got a high out there November 2nd of 99, and then you're talking that prior high back in early October of 101.86. So what I expect is going to happen, so that 99 is going to be the first resistance level it comes to, and then after that it will likely get to that 102 level. But then what I would expect to happen there, this is a stock, I mean, if you're long, you certainly don't want to sell it here, even if it does pull back, because what you'd have there is just a little handle area form, and then possibly a breakout over 102. So I would say its technical picture looks good here. If you're long, I would continue to stay long, and there's been some juice behind the move recently, so it's definitely come back to life.
And would you, on a pullback, where would you add more?
Well, so if this base is going to play out as I expect that you're going to get a retest of that 102. I doubt it's going to blow right through that. Now, if the market just decides to take off on a better than expected jobs report, it could happen. If it does, and it really doesn't consolidate at all, I would not add to it. I would wait for a pullback. When a stock drifts lower in light volume after a run up off the bottom, which is what Whole Foods is doing right now. It hits that low of 87. It's gone straight up to 96. If it gets to that 99 level, you could see a little pullback, maybe down to 90. 97, 96, back to where it currently is now. And then if it takes out that 99 level with volume, with conviction, breaks out over that swing point in volume, that would be a time to add. Now that process, it could just go by 99 and then go to 102 and then pull back maybe down to 99, 98. And if it does that in light volume, there's your new swing point, and then you could be a buyer on a heavy volume move over that new swing point. Does that make sense?
Yeah, it absolutely does. Wonderful.
Okay. Yeah.
Thanks, Ken.
Okay. Thanks for the call, Robert. Appreciate it.
Bye. Bye now.
Yeah, Whole Foods market. I don't have any problems admitting we went from a long only model portfolio to a long short model portfolio to sort of take advantage of stocks that possibly were breaking down. The one thing Whole Foods has going for it is, listen, they are the leader in the natural organic grocery space. They're pretty much the institutional quality name. Now, when you look at a weekly chart for Whole Foods market, it does look to me like a late stage base. It's made a massive price move, but you're up 11 days. You've got some above average volume price moves behind the stock. This one again could try to retest its recent high of 102, maybe low volume pullback down to 98, 97, something like that, and then maybe try for a legitimate technical breakout. So I think overall we're kind of in a perfect storm here for stocks. I don't know any other way to describe it but that, with the yield on the 10-year note, intent on moving over to that could bring some of these bond investors that are losing money into stocks. We talked about the generally weak technical picture of the U.S. dollar index that to me is pointing towards still lower prices here. And if you get weakness in the dollar, I mean, look at this dollar index here, just repeated resistance at the 50-day moving average for 6 or 7 days now. So on Friday it closed at 79.75. Last I checked, it was up 5 ticks to 79.80. Dollar index still looks very, very weak here. It's got some significant resistance levels to overcome. So rising bond yields, weakness in the dollar, pretty good corporate earnings, economic data that have generally been more good than bad. This does not seem to be that bad an environment for stocks to succeed here. So Whole Foods is one of these names that has bounced back with conviction, building the right side of a base. Could see a technical breakout here in the not too distant future. Wanted to take a look at these 3D printing names. Have been made no secret of the fact that they were very, very extended in price. We were talking about that all last week, talking about the dangers of chasing extended stocks that are way past proper entry points to buy. It's hard because names like 3D Systems, Stratasys, continuing to get daily press. Oh, they're the thing of the future. You got to own these things. And, bottom line is that 3D Systems falling apart today in spades, down 13%, $9.05 decline to 60.02. Crashes below its 20-day moving average, which some were thinking would be a near-term level of support. Certainly brings a play down to its 50-day moving average at 52 into play. When you have volume this extreme to the downside, and volume is very, very heavy today in 3D Systems. Unequivocal institutional selling in the stock today. 3D Systems normally trades about 2.2 million shares a day. It has traded 10 million shares up to this point. So do not try to catch this on sale. This is a stock that needs to base. It needs to consolidate gains. It needs to take a breather. So I would be very careful trying to catch this on sale. Same thing with Stratasys. Very similar looking chart here. But look at Stratasys. I mean, this one's down 10.25% to 78.18. It big sellers in this stock again today. It is all the way down to its 50-day moving average here, which is basically at 77. So it's about a little more than a point above its 50-day line. Would be very careful trying to catch this one on sale. Very bearish day for both 3D Systems and Stratasys. Let them form new bases and take it from there. So the 3D 3D stocks under tremendous amount of pressure today. And then other growth names under pressure as well. We'll take a look at shares of Priceline. Didn't see any news with Priceline, but big move for the stock on Friday. It is, considering the scope of its move Friday, not that big a deal. It's down 1.7% today to 706.52. 706.52. You see Priceline recently broke out over the 680 level, and Priceline continuing to grow nicely. This is another one I'm skeptical about its chances to provide meaningful leadership in 2013. Another name in the space that I like a lot better because of fundamentals, good fundamentals and technicals, would be Trip Advisor. Only because this one, to me, still looks like it could be in the early stages of a move here stock-wise. So TripAdvisor a little bit off its highs today, still up 1.1% to 46.48. It is toying with a breakout here over 47. But TripAdvisor normally trades about 2.3 million shares a day. It is traded about 2.1, so not a lot of juice yet in this stock, but one to keep an eye on in the online travel space. Amazon has recent days made good progress over a recent breakout over 263. Kind of a bearish day for the stock today, down $7.71, underperforming. A little bit of juice behind the downside move, down 2.7% to 276.28. So still holding well above that buy point of 263, but some sellers in Amazon today. Also take a look at Polaris Industries. They make snowmobiles, all ATVs, things like that. Kind of a wild day for Polaris. Hits a low of 89.42, but it is back up near its session high, last trading at 92.34. Still down 1% on the day. This is another stock that is extended after a recent breakout over 88. Wouldn't be buying Polaris here either. And then also CVLT, another stock showing relative price strength in recent days. Kind of a wild day of trading here. Hits a high of 75, a low of 71. Last trading at 72.72, down 2.2%. So a lot of growth names under pressure out there. PetSmart. Here, Nomura had some negative things to say about PetSmart. Look at this chart. I mean, this is just nastiness. Down 9.5% today to 63.37. Really not much in the way of sell signals ahead of today's downgrade by Nomura. The bank cut PetSmart to reduce from neutral, slashed its price target to 55 from 72. Nomura cited concerns about its e-commerce business, recent changes in senior management, as well as profit margin. So big sellers in PetSmart today. One bright spot in the market would be Waste Management, WM. Big kind of volatile day of trading. Waste Management hits a high of 37.98. It is trading in the bottom half of its range, last trading at 36.40, still up 2% on the day. Credit Suisse out with a note that it is considering converting to a real estate investment trust. That's a familiar headline, isn't it? A lot of companies lately considering changing over to REIT status. A lot of favorable tax benefits to doing that. With Waste Management, all the landfills that they own, probably makes some sense, although I am not a REIT expert. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's take a quick check of the markets here as we head into the close. Not much movement today. The Dow right now down a little more than 2 points to 13,893. Tech stocks still outperforming. NASDAQ Composite up a little more than 7 points to 3157. S&P 500 down 1.5 points to 1501. Wanted to take a look at Biogen IDEC. Nice earnings from the biotech earlier today. And the stock is, well off its session high, but still up 2.6% on the day to 150.04. Hit an intraday high of 156.94. So some, even though the stock is up 2.6%, still some sellers in Biogen today. Earnings fell 7% from a year ago to $1.40. That missed the consensus estimate by 6 cents. Sales a little better than expected, up 7% to $1.42 billion. Earnings guidance for 2013 a little bit below expectations, but Biogen did guide revenue above expectations. Of course, all eyes are on BG12. They are expecting FDA approval of this drug before the end of the first quarter. So perhaps sometime in February, March, they're expecting to get approval from the FDA for this oral multiple sclerosis treatment, an oral pill called BG12. So nice earnings from Biogen. We also heard from Caterpillar before the open today. Shares of Caterpillar up close to 2% to 97.36. Earnings down 37% from a year ago to $1.46. It was a pretty big miss, but I think there were some extra charges in there. Sales down 7% to $16.08 billion, mostly in line. Caterpillar, of course, makes construction and mining equipment. Lot of earnings reports to watch after the close today. Let's check in on shares of Yahoo. This one has been an outstanding performer. Technically, still looks very strong out here, not giving up any of its gains. Shares of Yahoo down 8 cents to 20.30 ahead of its report after the close today. Look for a profit of 28 cents a share, up 17% from a year ago, with sales up 4% to $1.21 billion. Also, after the close, Seagate Technology, one of two disk drive makers out there. We heard from Western Digital last week, I believe, but Seagate, also a monster stock up here, up 12 cents today to 37.37. Earnings at Seagate expected to be $1.28 a share. That would be down 3% from the year-ago quarter. Sales up 12% to $3.58 billion. And finally, after the close, VMware. Take a look at VMware. VMware not looking too bad here, holding above its 50, 200-day moving average. Shares of VMware down 61 cents to 98.39 ahead of the results. Look for profit to be up 26% to 78 cents a share. Sales up 21% to $1.28 billion. Did get some data from Thomson Reuters earlier today that S&P 500 earnings are now expected to rise 2.8% compared to the fourth quarter of 2011. Hard to believe, but only about 30% of S&P 500 firms have reported up to this point, so we're still actually pretty early in earnings season. Very busy week this week, and we'll be busy next week as well. Again, we've got the jobs report coming up Friday. Hopefully more good news there for the bulls before the open tomorrow. Reports from Ashland, ASH, EMC, Harley Davidson, Ford, JetBlue, a very solid airline stock out here, and also Polaris Industries that we mentioned earlier in the program. Those reports all coming up tomorrow before the open. Amazon.com after the close tomorrow. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, folks. Have a great day.